Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.
Good afternoon. We're getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at KBC.com. And the on-demand Mottek On Money podcast, KBC.com, Apple iTunes, YouTube, all your favorite podcast platforms. The Magnificent One, knocking it out of the park again, and the stock market has snapped a losing streak here with NVIDIA stock gaining in after-hours trading after the company reported third-quarter earnings that beat analysts' expectations. NVIDIA stock had closed at more than $5 today at $186 and change and is up nearly $10 now in after-hours trading to around $196 and change. The chipmakers report also boosted other AI companies, with AMD stock up nearly 4%, MU Micron Technologies climbing about 3%, and Amazon and Google, Meta, Microsoft all rising slightly. Yep, that losing streak has been snapped for the time being on that NVIDIA news. The S&P 500 snapped a 4-day losing streak, with tech shares leading the gains on that strong earnings report from NVIDIA. And investors also count the chipmaker as a bellwether for the AI trade that's carried markets to record in recent weeks. According to the Wall Street Journal, there were projections that another quarter of booming growth for NVIDIA's AI chip business, and investors said the results could power a rebound. Meanwhile, the economy was still expanding at an uneven but somewhat robust pace as summer drew to a close, based on some new readings today. Fed officials held strongly differing views about whether to cut interest rates next month, with the feeling among them rising that progress on inflation had stalled, according to a summary of the Fed's October meeting released today. The notes from the last big Fed meeting: many of the Fed managers were clear that they wanted the Fed to hold rates steady in December, and looks like there's a difference of opinion now on whether the Fed should cut interest rates next month. We're going to be talking about that and other things that are important with prominent Los Angeles area economist Dr. Christopher Thornberg, founding partner at Beacon Economics here in Southern California. He'll be joining us live later this hour. In the business of show business, Warner Brothers Studios officially on the block, as are HBO, CNN, Turner Broadcasting, DC Comics, the Discovery Channel, and other businesses owned by Warner Brothers Discovery. That media conglomerate holding an auction process with a deadline for the first round of non-binding bids set for tomorrow. According to the Wall Street Journal, Paramount, Skydance, Netflix, and Comcast are all preparing offers, according to the Journal. What's this about an overpaid CEO tax ordinance in Los Angeles? What does that mean? Well, the measure is basically a special tax. We'll learn more about that and more from Susan SHELLY, columnist for the Southern California News Group and host of the Howard Jarvis radio show, which happens to be heard every Tuesday night right here on 790 KBC and KSFO in the Bay Area. But first, on your money, the markets, the economy, gold, crypto too, which is seeing wild moves lately. The whole works. Joining us live now, Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call today, and give us your view of this latest market action here.
Well, Frank, we've got seasonal tailwinds. The fourth quarter, historically, and I'm going back 75 years here since 1950, it shows median gains of between 4.3 and 4.9%, and we're talking about an 81% win ratio in the fourth quarter since 1950. That implies higher levels. Of course, we got good news from the bellwether, as you mentioned, and NVIDIA. It's got an outsized influence on all the major indexes. Even if you don't hold NVIDIA stock yourself, you're a participant if you own the market indexes, if you own stocks in general, because so many of the other companies are getting involved in this AI ecosystem. It's scaling faster and faster. NVIDIA's strong quarterly results certainly have boosted other AI-related companies, as you mentioned. But I think it's going to be generally positive for the market in this fourth quarter. AI now accounts for about a third of the U.S. market's overall value.
Very interesting. On the air live with Gabriel Wisdom with American Money Management. And up until today, there was a lot of bubble talk about the AI space and all that. Have those concerns eased now that we've seen NVIDIA with its better than expected results again today?
I think they have, Frank, because revenue growth, earnings growth, it's far different than the bubble of the Tech Wreck 2000. But high-tech AI does have a low-tech problem. There's a lack of electricity and a lack of permitting for the badly needed AI data centers. It's moving very, very slowly. AMD said recently that their AI data center revenue ought to grow about 80% per year, assuming they can get these data centers online. But then AI data center provider CoreWeave says that they're missing expectations because they just can't do it fast enough. And then Microsoft recently raised some similar concerns about construction delays. So it's a very real high-class problem.
Very interesting. And on the energy front, we've been watching shares of Constellation Energy Corporation moving higher after the company landed a $1 billion federal loan from the Department of Energy, facilitating the restart of the 3 Mile Island nuclear plant, Unit 1 there. That is big news. And in this quest for more energy, including nuclear, to fuel all of the AI and crypto entities out there nowadays. What's your thought on this deal and energy overall?
Well, this is very, very big, Frank. You know, in early June, Constellation Energy signed a 20-year energy deal for Facebook's parent Meta Platforms. They've got big AI ambitions, and then Constellation also made a deal with Microsoft, a deal that would see Constellation restart the Unit 1 as well. So, you know, and they need power to run some of Microsoft's data centers in that area. The Constellation shares are up pretty dramatically this year, along with Vistro, which is another nuclear play, and Talon Energy has topped analyst expectations as well, with profit growth of more than 34% this year so far. So we're back to nuclear.
All right, and in oil, hovering around $60, below 60 again here today. Are you touching any of the oil names at this level? The oil stocks have certainly been under pressure as the price of oil has moved lower, to the delight of consumers, of course.
That's right. It's been one of the worst performing sectors in the public markets, oil and oil-related companies. But oil companies are grumbling now because the old pledge to drill, baby, drill, it just hasn't happened. Now, maybe it's just not happening fast enough, but there's going to be, I think, a shortage of legacy energy. And now the Saudi prince, who's at the White House today, says they want to play a major role in liquid natural gas, and they're doing it. And even the farmers who have really had a tough 2025 with commodity prices down so sharply and the cost of everything they need up sharply, they're seeing some relief with corn. Corn prices have risen off their lows because of ethanol. Everybody seems to want ethanol, which is a nice alternative, but traditional energy source.
It looks like it's showing up here too in California now. What about cryptos? Of course, as you well know, we talked to the biggest fans of cryptos as well as the harshest critics, and Bitcoin has seen a tough week or so, cracking below 90,000 again today, I believe. Right now, let me take a look. Bitcoin hovering at around 91,000. What are your thoughts about what's happening in crypto land here?
Well, I think it's been psychological all the way up, and now with the recent sell-off. And there are many theories about what's gone wrong in the short run. Here, some are saying it has to do with October's big, initial crash, that shook some confidence. But I think, Frank, that Bitcoin if you're calling it digital gold, it has failed so far at offsetting losses from sell-offs and to act as a safe haven like gold does, and maybe that accounts for some of the weakness. Over the long run, I'm pretty positive on all things digital, and that would probably include crypto. But right now, fear is a stronger sentiment than greed.
Yeah, and Bitcoin down nearly 30,000 from its recent all-time high, which was above 126,000. We're keeping an eye on it. And of course, the other cryptos have come under pressure as well. What about analog gold, as we call it here? Gold still above 4,000 after that record run-up we've seen this year to up around 4,500. Gold, too, has pulled back right now just below 4,100. What about analog gold here now?
Well, I still like it. I think that gold and the other, metals, semi-precious metals, all deserve a place in a diversified portfolio, including the industrial metals. We see copper above $5 now, finally, but that's a very positive sign for next year's housing market and auto industry. Both use a lot of copper. Gold, it remains controversial, though, and I don't really get it. Even Warren Buffett said not too long ago, anybody watching gold from Mars would be scratching their head because it gets dug up out of the ground, and then we melt it down, we dig another hole, we bury it again, we pay people to stand around guarding it. It has no utility. Well, right now the banks like it, so and the trend is certainly friendly.
Right, and especially getting a lot of attention when it's record highs. Silver, by the way, is back above $51 an ounce here at $51.45. Any other thoughts on the metals, platinum, palladium, and so forth?
Well, palladium is actually rarer than gold. It's popular for jewelry applications, but it's absolutely essential for hybrid vehicle production, for producing catalytic converters that help to reduce gasoline emissions. These metals are essential. Palladium is a member of the platinum group of metals. It's rarer than platinum. And these are very valuable commodities, and they've been ignored for a long time.
All right, we did get some new readings on the economy. We'll be talking to economist Christopher Thornberg later this hour. You too are an economist, so give us your impressions of what we got on the latest readings on the economy today, as well as the signals from the Federal Reserve picked up and the notes from the Fed's last policy-setting meeting, indicating a lot of the Fed policy makers are not too excited about lowering their benchmark interest rate again next month.
Well, that's right. The Fed's got a major dilemma here, Frank. They've always had a dual mandate from Congress to keep inflation down and employment high. And right now, inflation is high, or it's higher than they want it to be, and employment is heading in the wrong direction. Now, tomorrow we get the Bureau of Labor Statistics number. They're not going to publish the monthly employment situation jobs report for October because the shutdown just hampered all systems there. But the September jobs report, which was also delayed due to the shutdown, is going to be released tomorrow. The Fed has been sort of flying blind. They lean on these jobs reports for key input on interest rate policy decisions, and so tomorrow's report is going to be essential.
And what is your gut feeling on inflation and jobs at this point, and where this economy goes from here heading into 2026?
I'm very positive on the economy overall. I see a broadening of participation in the financial markets. There are some, concerns. AI is replacing workers faster than anticipated. That's creating, some mismatch there. You've got baby boomers retiring. That's creating labor supply constraints. Immigration restrictions are limiting workforce growth. And these are the kinds of structural issues that can't be solved by the Federal Reserve or, in a Fed rate cut per se. And then finally, we heard from Target, the discount retailer, they cut their full year profit guidance, a warning of a tepid holiday season. So I don't expect a full scale recession, but the consumer's clearly holding back while tariffs raise prices.
All right, in the face of all of this, Gabriel Wisdom will ask the big question here now. Any specific places where you are putting money now and or taking it off the table?
Well, I'm betting on a housing rebound next year. Fair Isaac Corporation, they own the FICO score. They're in a very enviable position in American finance. They control a very small but absolutely critical piece of the U.S. housing market with their FICO credit score. It's a single product kind of company. They now are rolling out a new direct licensing program. And then if you bet on a potential rebound in the U.S. housing markets, I think this stock, it looks attractive here. The symbol FICO. It's not cheap, but got a tailwind. I like that. And then Warren Buffett, Berkshire Hathaway picked up some Google. I was happy to see that. Google Class C, to me, looks very undervalued given their portfolio of holdings.
All right, Gabriel Wisdom with American Money Management, Managing Director at American Money Management, based right here in Southern California, author of Wisdom on Value Investing. Gabriel, it's always great to have you with us. Thank you very much for taking the call live with us here this afternoon.
Thank you, Frank.
And out to the freeways we go now on 790 KABC. 790 KABC welcomes the one and only Engelbert Humperdinck. A Winter World of Love coming to the City National Grove of Anaheim coming up this Sunday, November 23rd. Tickets on sale now at Ticketmaster.com. Right now, caller 9 wins. Call now, 1-888-790-5222. You can get a pair of tickets to the show if you're caller number 9. Call right now, 1-888-790-5222. The tickets furnished by Nederlander Concerts. We have a winner on Wall Street today for a change, snapping a 4-day losing streak with the Dow Jones Industrial Average closing at 47 points, putting it at 46,139. It was just a little over a week ago that it was above 48K, hitting a record high. The S&P 500 of 25 today at 6,642, and the NASDAQ gained 131 at 22,564. The yield in the 10-year note pulling back today a bit to 4.14%. The VIX index down 4%. That's the volatility index. Crypto all over the place again. It looks like Bitcoin cracked below 90 early on, and right now it's at 91,300 or so. Silver, well, let's start with Solana, that is, at $136 in the crypto space. ETH at $3,015. Doge at the moment at 15 cents. Analog gold up about $3 now at $4,086 and change. Silver is hovering at around $51.45 an ounce. NVIDIA, the magnificent one, on its earnings news, moving up more than $5 today at $186 and change after hours. The stock is up another nearly $10 at $196 and change. NVIDIA reported record sales and strong guidance, helping to ease jitters about an AI bubble that have reverberated in the markets in the last week. As the Wall Street Journal notes, sales in the October quarter hit a record $57 billion as demand for the company's advanced AI chips continue to surge, up 62%, as a matter of fact, from the year earlier quarter and exceeding analyst expectations. And the company increased its guidance for the current quarter, estimating that sales will reach $65 billion. Analysts had predicted revenue of $62.1 billion for the quarter. And now the latest news here on 790 KABC.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.
November is heating up for U.S. soccer.
United States need to be a little more nasty.
Big international friendlies for the men.
Right! Crashing on scores! Callum, that was nasty.
And a Black Friday friendly for the women.
Expectations have always been here for this team. We understand that.
Listen anywhere on the go with the Westwood One Sports app. And for behind-the-scenes stories, catch the U.S. Soccer Podcast.
Boy, do we have an episode for you.
Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC. Here's something new. Have you heard about this? The so-called overpaid CEO tax ordinance in Los Angeles. Measures basically a special tax. Let's find out what we need to know about this. And joining us live now is the one and only Susan Shelley, columnist for the Southern California News Group, which includes the LA Daily News, host of the Howard Jarvis radio show, heard Tuesday nights here on 790 KABC, as well as KSFO in the Bay Area. Susan, thank you very much for coming to the line here this afternoon.
Thank you, Frank. Great to be with you.
Wonderful to have you with us again. And yeah, take it from the top. I caught this. What is this so-called overpaid CEO tax ordinance, and what do we need to know about this?
Well, this is an initiative tax increase. The idea is that the citizens decide they want to raise taxes. And this is going to go through a loophole from a 2017 state Supreme Court decision that says tax increases for a special purpose don't have to meet the 2/3 vote requirement if they're put together by citizens with initiative petitions and they collect the signatures. This is a loophole that the Howard Jarvis Taxpayers Association is trying to close. But what this one would do is it would put a higher business tax on companies where the CEO was paid 50 times as much or more as the median employee of the company. So if the highest paid person in the company is paid 50 times more than the median compensation of LA-based employees, then they would face a business tax in addition to the gross receipts tax they already pay of 1 to 10 times above their regular business tax, just for having income inequality on their payroll.
Who came up with this? Who's pushing for this?
I believe this is coming to us from Unite Here, Local 11. I think it's coming from the Hotel Workers Union, but it's definitely coming from the union.
Very interesting. On the air live with Susan Shelley, who was with the Howard Jarvis radio show, heard Tuesday nights here in 790 KBC, and certainly this is something that's going to be watched very, very closely. So has there been anything like this elsewhere? Have you seen any other similar law in the books any place else around the country?
Yes. Apparently Portland did this in 2018. They did this only for public companies, and they were going off of the Securities and Exchange Commission data. But then San Francisco did it with Measure L in 2020, and this is 100 times. So if a company's CEO is paid 100 times the median salary of the workers, then they also have a higher business tax on top of their gross receipts tax. So there are 2 cities that have done this. But of course, this drives companies out of Los Angeles to get away from this kind of thing, which takes jobs away from the city, which hurts everybody.
Yeah, I was just going to say, this is certainly not a business-friendly initiative, right? And the end result will be more companies leaving, it sounds like.
Exactly. And, the Constitution requires that when a tax is for a special purpose, and this one is, it would fund affordable housing and street and sidewalk repairs and other specified purposes, a tax for a special purpose must be approved by a 2/3 vote of the electorate. But because of this loophole that the Supreme Court created that said, well, if it's a citizens' initiative tax increase, the Constitution doesn't apply at all. Because they've indicated that, and the appellate courts have widened this loophole with decision after decision, we are in a situation where special interests can write their own tax increase, collect the signatures to put it on the ballot, direct all the money to themselves, and evade the 2/3 vote requirement. And this is a loophole that must be closed, which is why the Howard Jarvis Taxpayers Association has the Save Prop 13 measure that we are qualifying for signatures right now. We're qualifying for the November 2026 ballot with a petition that's available at saveprop13.com. This is one of the protections that was in Prop 13, this 2/3 vote requirement for local special taxes. And the courts are erasing your taxpayer protections. So the Save Prop 13 initiative will close that loophole.
All right, let's hear that again, Susan, for those who want to save Proposition 13 and support your efforts here, which you're, of course, the great advocate for taxpayers here in the Los Angeles area. Tell us what people need to do to get behind you and support that.
It's very simple. You just go to saveprop13.com. You can download and print an official petition right in your home computer on your printer, or HJTA will mail it to you. You just sign it, you fill out the little form at the bottom that makes it legal, and you mail it back to the Howard Jarvis Taxpayers Association. SaveProp13.com. It needs 1 million signatures by the middle of February to make the ballot in November 2026.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. On the air live with Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights on 790 KABC as well as KSFO in the San Francisco Bay Area. Switching gears for a moment, what's the latest on ULA, the so-called mansion tax? A lot of confusion here now, especially with the rebuilding, the massive rebuilding, basically struggling to get some momentum here in the Los Angeles area, in the firestorm areas and the Palisades and Altadena, and certainly these recent storms haven't helped. Give us an update on what's happening on that front.
Well, there is an appeal. The Howard Jarvis Taxpayers Association challenged it as an invalid tax. And because of this loophole about the citizens' initiative, the lower court said it was fine. But we're still making the argument at the appellate level, and oral arguments have already taken place. We're waiting on the decision from the appellate court on whether this is or is not a valid tax. Our argument is that because there's a provision in the Los Angeles City Charter that says the voters cannot do anything that the city council itself is prohibited from doing, it's an invalid tax. The charter says that the citizens can't do more than the council, and the council is not allowed to do a special transfer tax. That's prohibited. And yet it was allowed under this other loophole for the for citizen initiative tax increases. So if the appellate court strikes down ULA, then people will actually get a refund. I mean, if it goes to the Supreme Court, it would have to resolve there. But if the Supreme Court turned it down, then people would get refunds for the ULA tax that they already paid. If it's not struck down by the appellate court, then we are going to reverse it with the Save Prop 13 initiative, because it reverses transfer taxes. In addition to closing that loophole on the 2/3, it bans transfer taxes and sunsets ULA in 2 years, which is very important because Prop 13 banned transfer taxes. They're like sales taxes on real estate. Prop 13 banned that because in cutting property taxes, the idea was not to allow other taxes to grab the same money from people. So it banned transfer taxes and it required a 2/3 vote, and those have been erased by the courts. So the Save Prop 13 initiative closes the loophole.
Thank you for that very important explanation here, Susan Shelley. And of course, this tax was sold as a mansion, so-called mansion tax to soak the rich. Apparently, that was the idea, but it's impacted commercial real estate in a big way. And tomorrow at this time, right here on this program, we'll be speaking live to Lou Horn, who's the head of CBRE here in Southern California, the number one commercial real estate firm in the world, the biggest certainly, and he'll be on the air with us to talk more about the impact of ULA as well as the rebuilding efforts. So make sure everyone tunes in again tomorrow on that important story. Anything else, Susan Shelley, you'd like to take note of here on the tax front?
Well, it's always important to stay alert on all of these things while they're on the ballot. So many of these initiatives, people don't find out about them till after the election, and then it's too late. So I would urge everyone to join the Howard Jarvis Taxpayers Association at hjta.org and be on the mailing list and be aware of these things while there's still time to stop them, because it's a lot easier to stop them before they're passed than it is to go after them in court afterwards. That's a slow process. So if everybody joins Howard Jarvis and stays on top of it in advance, that would be the best way to prevent these things from happening.
All right, give us your website one more time there, Susan.
It's the Howard Jarvis Taxpayers Association, hjta.org.
All right, and then the other important website on saving Prop 13.
That's saveprop13.com. You can print the petition, sign it, and mail it in.
Susan, thank you very much for getting that important information out. Susan Shelley, columnist for the Southern California News Group, host of the Howard Jarvis radio show here on 790 KBC Tuesday nights, as well as on KSFO in the San Francisco Bay Area. Susan, thanks again for taking the call here today.
Thank you, Frank.
Out to the freeways we go now. Beautiful evening. 790 KBC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Michael Rosenbaum and Tom Welling take you behind the scenes of one of the greatest shows of all time.
They're an ultimate rewatch podcast. We're in the midst of season 7, and
hold on. Obviously, we had a very successful television show for 10 years that was Superman based.
But we had to make everyone believe that you were Clark.
I gotta be honest, I was surprised at the end of this episode that I wasn't.
I was too.
Talkville, the Smallville rewatch podcast.
I'm not sure I knew when I was filming it that I was not me.
Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC, turning now to the Main Street economy. The economy was still expanding at a pretty decent pace, but uneven as summer drew to a close based on some new readings we got. We also got the notes from the Fed's last policy-setting meeting, where the Fed policymakers held strongly differing views about whether to cut interest rates next month, with the feeling among many rising that progress on inflation had stalled, according to a summary of the Fed's October meeting that came out today. Many Fed policymakers were clear that they wanted the Fed to hold rates steady next month. So we're seeing divisions here now over whether the Fed should cut interest rates. And that's going to be an open question here as we get into December. A lot of things happening here locally, of course, with the ongoing rebuilding and the holiday season getting started. Let's bring in prominent Los Angeles area economist Dr. Christopher Thornberg, founding partner at Beacon Economics, based here in Los Angeles. Christopher Thornberg, thank you very much for coming to the line here.
Great to be here, Frank.
All right, give us your read on the latest numbers we got here on the economy and where things stand at this point.
Well, of course, we don't have a lot of numbers. The government just turned on, and the various data services are starting to catch up, if you will. They have to process a lot of data that came in over the last few weeks. But that said, look, I anticipate the second half of the year, as these data do start coming in, will look fine. We came into the second half of the year with a lot of momentum, 4% growth in the second quarter of the year. And coming into the third quarter, there were some good numbers in retail sales. Restaurant spending was up, believe it or not. And, of course, automobile sales looked pretty steady at about a 16 million unit annualized pace. So decent momentum, clearly not as fast as the last couple of years, but an economy that should come out of 2025, as noted, looking pretty good.
All right. Based on the cards that we know are on the table here now, what do you think the Fed is going to do next month?
Boy, that is a big question. Look, there's two sides of this equation. Inflation is still a tad bit high, and perhaps even more worrisome is that stock market. Now, I know it's softened over the last couple of days, but it has really been going up by leaps and bounds, which is something else the Fed worries about. That could be inflation causing, and of course, if they don't try to slow things down with an interest rate cut, it could turn into really a very dangerous bubble. So that is, of course, up against the other side of it, which is the president and many other people on the Capitol are screaming, cut the rates, add more fuel to the fire, spike the punch a little bit more. Let's go. So.
What do you think?
I think they're going to hold pat. That's what I think.
Wow. Okay.
I think they're going to hold still. Last time Powell said, don't be so sure we're going to cut. So he might hold off just to prove to the market that he is indeed credible.
Very interesting. On the live with Dr. Christopher Thornberg at Beacon Economics. Turning to real estate for a moment. I don't know if you saw that Zillow reading that said more than half of the country's homes have lost value this year. What about that, and what do you see ahead on the real estate front?
Well, look, again, the economy's been slowing and interest rates have been high. You had some insurance issues in some parts of the United States and a little bit of overbuilding. So, yeah, I'm not surprised that the market took a little bit of a pause. But that said, look where mortgage rates have come down to. In fact, I just heard an ad right on this broadcast which talked about a interest rate below 6%. It's been a while since I've heard that particular figure. Yet again, that could probably get a little goose in the market coming into the end of the year. You might actually see the market stabilize a bit. All that said, I would say that this is probably a short-term, shall we say, slowdown and a decline in interest rates, given, of course, the pace of federal borrowing at this particular point in time. One has to assume that rates will start going up in the future.
Focusing now on what's happening here in the Los Angeles area with this recovery continuing here following the massive firestorms in January in the Palisades, Malibu, as well as Altadena. Give us your assessment of what's happening there.
Well, frustratingly slow progress, right? We understand what the holdup is. We have an insanely complicated bureaucracy that oversees the construction of buildings, many overlapping regulatory turfs. People really don't understand where their line ends and someone else's begins. This is what's been holding up construction in LA for decades, and everybody in these burned areas are running into those same problems, which is why the pace of rebuilding has become so slow. Tragically, as opposed to focusing on fixing that, our city council here in LA seems more obviously focused on promoting rent control and pushing back against the state government in terms of building density around our transit lines. To me, it's a tragic lack of focus, particularly since, we're a couple of years away from the Olympics. We really want to have all this done by then, don't we?
Absolutely. You were probably here for the Northridge earthquake. I remember that when there was a very intense recovery under Mayor Richard J. Reardon back in those days. And then the state, that guy who ran the operation of emergency services was in the news all the time. And there seemed to be a much more cohesive and more effective recovery under that leadership back then than what we're seeing now. Don't you agree?
Absolutely. And I think it's just a reflection of politics. We all know that the left and the right have gone extremely partisan in their respective directions. And so much of policy and politics today seems more about virtue signaling than just keeping the trains running on time. That's a bad lack of focus. And, it's high time we cooled off the political rhetoric and started focusing on what's really important to people on a day-to-day basis.
As far as the, of course, the loss of life, or the homes lost and the businesses lost too. We plan to be speaking to Rick Caruso here again soon from leading the Steadfast LA recovery effort. And Lou Horn on the commercial real estate front also will be joining us tomorrow with more about the recovery efforts regarding commercial real estate. What do you see ahead here as far as business recovery, and what is the outlook here for the local economy, which you're focused on?
Yeah, well, the local economy looks steady. We know we've had some issues in the motion picture industry, and manufacturing is down a bit. But that said, look, ultimately, LA has a very, very powerful core. Our location, our universities, the industries that locate here. This is a city that will continue to succeed. But the problem here is I think that ability to succeed is being held back, not to repeat myself, but by this bloated bureaucracy that seems more intent on control than just letting people do what they need to do. We need more housing desperately in this city, and we need housing at every level, not just affordable housing. And that's a function of again, getting control of things and having a new set of priorities.
What do you think would accelerate the rebuilding process? Some cohesive master plan, or what do you think it's going to take to turn this thing around?
Well, again, it's a function of looking at the bureaucracy and saying, listen, we have to start promising people that if they're going to turn in for a permit, we're going to give them a straight answer in X amount of time. And if we don't, that's on us. They get to go ahead and build. You have to get out of the way. The standard inclination of our regulatory policies is that when there's a problem, they want to slap even more regulations on top of it, and then more on top of that, and more on top of that. This is the point in time where we need to stop trying to re-regulate and start trying to deregulate. Figure out ways of simplifying the process, getting out of the way, speeding things up. Look, people want to invest in these communities. People want to live in this wonderful place, and we ought to make it easy for them to do just that.
Wish we had more time. Christopher Thornberg, thank you very much for fielding all these questions here. Hope to speak to you again about the holiday shopping season and other important things coming up in the weeks ahead. That is Dr. Christopher Thornberg, economist, founding partner at Beacon Economics. Thank you very much, Chris, for joining us live here this afternoon.
Great to be here, Frank. Have a great Thanksgiving.
Thank you. Thank you, you too. Thank you very much for that. Coming up tomorrow, Lou Horn will be on with CBRE, talking more about the recovery efforts, so stay tuned again. In the meantime, we saw the Dow finally break a four-session losing streak with a closing gain of 47, S&P 500 of 25, NASDAQ of 131. Tomorrow on this program, Dan Ives from Wedbush will be talking more about NVIDIA and the tech sector. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on 790 KBC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.